Hi, everyone. Today we are diving into a subject that every solopreneur needs to know about, and that is common tax write offs. Whether you are just starting out your business or you've been self employed for a while, understanding tax deductions is crucial for optimizing your finances. Today, we are going to explore the world of tax write offs specifically tailored towards solopreneurs, and we'll cover what they are, how you qualify for them, and then some overlooked deductions that could save you some money. First off, let's start with clarifying what tax write offs or deductions actually are. In simple terms, these are expenses that you can subtract from your total income to reduce the amount of income that is subject to taxation. So, if you're a solopreneur with a small business or a freelance gig, these deductions can significantly impact your bottom line. So, let's get into it. Let's start with the most common and most well known tax write off, which is the home office deduction. If you work from home, you can often deduct expenses related to your home office, such as rent or mortgage expense, utilities, and maintenance costs from your taxes. So, to qualify, your home office should be exclusively for business purposes, and it should be your principal place of business. The biggest roadblock to qualifying for these deductions is that you must use a portion of your home exclusively and regularly for your business. The law is very clear, and the IRS is very serious about this exclusive use requirement. So, let's say you set aside a room in your home for your full time business and you work in there all week long, 10 hours a day, 7 days a week, right? If you let your children use the office to do their homework, you are violating that exclusive use requirement and you forfeit the chance for home office deductions. So, even if you're using it every single day of the week for work purposes, just the smallest little thing like letting your kids use it for their homework, it actually forfeits your chance. So, just keep that in mind when you are setting aside this space in your home. In addition to passing the exclusive use and regular use tests, your home office must either be the principal location of that business or it must be a place for regular customer and client meetings. So, let's say you do qualify for it. How do you calculate this deduction? Well, there are two methods. The first one is you can use the percentage, you can calculate the percentage of your home that is used for the business. And then the second option is to use, they call it the simplified square footage calculation. So let's talk about both of those. The most exact way to calculate the deduction is using the percentage method. You do this by measuring the square footage devoted to your home office as a percentage of the total area of your home. So, for example, if your office measures 150 square feet and the total area of your home is 1,200 square feet, your business percentage would be 12.5%. So, what that means is 12.5% of your home expenses can be tax deductible as business expenses. And then there's the simplified square footage calculation where you can deduct up to $5 for every square foot of work area used exclusively for business purposes. The IRS allows a maximum deduction of up to 300 square feet or $1,500. Using either method can be a significant tax saver because it allows you to turn a portion of your living expenses into deductible business expenses. All right, we've talked enough about that. Let's move on to the next thing that I want to talk about, which is vehicle expenses. This is another common deduction, and it allows you to, if you use your car for business purposes, you can deduct certain vehicle related costs from your taxes. This includes gas, mileage, maintenance, insurance, and even a portion of your car's depreciation. You have to keep meticulous records of your mileage and expenses to support your deduction claims. In 2023, every business mile is worth 65.5 cents, which can add up to a lot over the course of a year. For example, if you drive 10,000 miles this year for work purposes, your mileage would be worth a $6,550 deduction, which is not nothing. It is important to note that you can't deduct your commute. So if you don't work from home and you drive to and from work, that is not included. But you can write off every other trip that's related to your business. So how do you record mileage in a way that would substantiate your tax write off? Well, this is super important, right? Because you have to provide detailed records of all of your trips if you want to claim the deduction. Keep track of the date, the starting and end locations of each trip, the total mileage of each trip, and the purpose of the trip. Some people prefer to keep like a mileage log in their car where they can easily jot down the details of each trip. And then others prefer using a mileage tracking app on their smartphone, which is personally my recommendation. I feel like I always have my phone on me, so I might as well put it to use when I'm driving for work. Okay, let's move on to professional services and training. As you know, solopreneurs often need to invest in their own skills and knowledge to stay competitive in the market. Fortunately, expenses related to professional development and training are usually tax deductible. This includes everything from like the cost of workshops and conferences to online courses and hiring business coaches. Investing in yourself and your business is not only smart, but it also comes with a tax benefit. So just remember, like everything else, that you need to keep detailed records of your expenses and be able to prove that they're directly related to improving your business skills and knowledge. The next thing I want to talk about is marketing and advertising. As we all know, marketing and advertising is essential for any solopreneur. And the good news is that most of these expenses are tax deductible. So whether you're running online ads or sponsoring local events, or even just printing things like business cards, these costs can significantly reduce your tax liability. So it's vital to keep track of all of your marketing and advertising expenses, including keeping those receipts and invoices, so that when tax time rolls around, you can claim these as deductions accurately. Next, let's talk about supplies and equipment. Running a business often requires various supplies and equipment, everything from laptops to software to office supplies, tools, whatever it is. The cost of these items is generally deductible, and you can either deduct the entire expense in the year that you purchased it, or you can depreciate it over several years, depending on kind of how much the item costs and what its useful life is, if it's a larger item. When it comes to larger equipment purchases like computers or machinery, if you're buying a lot of it or if it's really expensive, I recommend consulting with a tax professional or bookkeeper to determine the best depreciation strategy for your business. The next thing we're going to talk about is health insurance premiums. Health insurance can be a significant expense for solopreneurs, but there's good news on this front, and that's that if you're self-employed, you can often deduct the cost of your health insurance premiums for yourself, your spouse, and your dependents. This deduction can be taken even if you don't itemize your deductions. Health insurance premiums can be a substantial financial burden, and being able to deduct them can provide you some much needed relief, right? Again, just keep good records of that stuff so that when it comes time, you have proof. Similar to health insurance, let's talk about retirement contributions. It's important, right? Planning for retirement is crucial, even for solopreneurs. And you have several options when it comes to retirement plans, like a solo 401k or an IRA, and your contributions to these plans are tax deductible. Plus, saving for retirement obviously is an excellent way to secure your financial future. And just don't forget that if you are over the age of 50, you can make catch-up contributions. So that can boost your retirement savings and your tax deductions. Finally, there are various miscellaneous deductions that solopreneurs should be aware of. This includes things like professional association dues, business-related travel expenses, and even some legal and professional fees. While these deductions may not be as common as the ones I mentioned earlier, they can still add up to a lot and reduce your overall taxable income. It's essential to stay informed about the specific deductions that apply to your industry and business type. And like I always recommend, I do think you should talk to a tax professional who can help you uncover any additional deductions that you might be eligible for. Before we wrap up today's episode, let's emphasize the importance of proper record keeping and tax planning, as if I haven't already harped on this enough this episode. I feel like I talk about this honestly every single episode, and I'm sorry for the redundancy, but honestly, it is so important, if not the most important aspect of accounting. To maximize your tax write offs, you have to have accurate records of all of your income and expenses throughout the year. This not only ensures that you claim all of your eligible deductions, but it also helps you avoid any potential issues with the IRS. That's a wrap for today's episode of Accounting Recounted. I hope you found my discussion on common tax write offs both informative and practical. Remember, taxes don't have to be a source of stress. With the right knowledge and planning, you can navigate them successfully and keep more of your hard earned money. Thank you for joining us today. If you have any questions or topics that you'd like me to cover in future episodes, please reach out to me on social media or over email. Until next time, stay financially savvy and keep working towards your financial freedom.